Welcome back, everyone. Next up, we have LiveToBeHappy Inc. It trades on the OTC Pink sheets under the symbol CAVR and is a platform company that acquires undervalued assets and professionally manages them. Its wholly owned subsidiary, Sinacori Builders, is a residential land development and custom single and multifamily home builder in Charlotte, North Carolina. Please welcome its CEO, Kevin Cox. Welcome back, Kevin. How are you doing today?
Anna, I'm doing well. I appreciate it.
Good. We look forward to hearing your presentation.
Okay, sounds good. I'm going to jump right in then. Obviously, a few cautionary statements we have to make every time when we use things like plan, when we use things like goals. We do set out to do these things, but keep in mind those are forward-looking statements. Going to the LTBH executive team, I've done a couple of these emerging growth conference presentations. I enjoy them. I get great feedback from our shareholders. But for those who are joining new, a little introduction to us, who we are, what we do, and our executive team. I'm Kevin Cox. I'm the CEO. My background is in logistics, supply chain strategy, mergers, and acquisitions. I put together a plan several years ago to form a company called Logistics Technologies. We raised $50 million, around $50 million in equity and debt finance. We put 8 companies together, closed them all in a single transaction. 4.5 years later, that company was sold for $185 million. It was a great return. And we're here doing the same thing. I'm excited to be part of the LiveToBeHappy team and driving our long-term growth objectives. We have Grant Edwards, who's our Chief Financial Officer. Grant has public company experience, is also an entrepreneur. We have Russ Sinacori, who's our Chief Operating Officer. He's the lead on Sinacori Builders. He also is the lead in real estate, has merger and acquisition experience, and a lot of experience building companies. Bob Silver, who's our Chief Innovations Officer, constantly innovating, constantly incubating new ideas, constantly promoting and pushing out the envelope. And then we have Dr. Stephanie Krishner, who's our Chief Medical Director and also our Health and Wellness lead in our Health and Wellness division. So I'm excited to have this team. But let's go to what does LiveToBeHappy do? We're a collection of lifestyle companies focused on building lives. We identify and acquire undervalued revenue-producing companies or products, and we professionally manage them. We build these companies and we build these products into strong brands and deliver above market value. When we set out to accomplish this strategy a year ago, the NASDAQ was nearing a peak. Risk was rewarded and risk-taking behavior was engaged in. And now, of course, we're on the other side of that where risk is being pulled off the table. There's concern about recession. There's concern about inflation. There's concern everywhere. Fortunately, we take a long-term approach. We take a long-term strategy. And I'm going to talk a little bit about that. But we're focused on our mission, which is building lives and building lives via a number of revenue-producing companies and products that we turn into strong lifestyle brands. We have several sectors. We have a real estate division, small business services, health and wellness, education, and entertainment. But I want to go to strategy. We set ourselves up and distinguished ourselves amongst our fellow OTC Pink companies because we set up a strategy that was focused on the long term. We focused heavily on a mission, which is building lives, but also on diversifying our revenue streams, acquiring multiple companies and multiple products all around that mission. The result is that what we'll show you here in a second is that we've made real progress. Our strategy is working, and I will demonstrate that here in just a second. But I want to focus on the fact that strategy is critical. We look at our business and we look at building lives as not just a short-term, one-hit wonder, so to speak. We're investing in the short-term, mid-term, long-term. We aim to create significant shareholder value in good times and bad times. One of the things you'll see with strategy is that we're focused, we aren't affected as dramatically by the shifts in the winds that come with traditional OTC Pink companies. So we adopted this #real mantra. So #real, #strategy. We do that because in comparison, we have real businesses, real revenue, a real strategy, and you'll see we're creating real results. Now, we set really big goals for each of our companies. We set big goals for our company. We've accomplished amazing things. We've acquired 5 companies in a short period of time, and I'll show you some of those results. If there is an error that we've made, and we have, every company does, is that we've maybe been too aggressive on the timeline. But understand that when you're focused on the strategy and you're focused on execution, you might get a little excited about the timeline. I'm being more careful about that. But I want to put out there that we are doing what we said we were going to do. We said we were going to diversify our income streams. We said we were going to diversify our cash flow. We said we were going to acquire companies. We said we were going to create a strong, long-term, mission-oriented holding company. And we're doing those things. So #real, #progress. Because although we set really big goals, and everybody in the OTC does, and everybody in emerging markets does, and everybody on the innovation side of the curve does, but where we differ is that we execute in a very methodical way. As a result, again, though we might not achieve them on the timeline we're looking for, we do achieve the results. And I'm excited to share some of the progress we've made. From a pure financial perspective, if you look at the company, in 2019, the company had $0 in revenue and a loss of over $100,000. In 2020, with the acquisition under Bob Silver's leadership of Sinacori Builders, and this is the 2020 numbers or audited numbers, we had $8 million roughly in revenue. Still lost money on a gross profit basis. So then as I came along with Bob still as chairman, Bob as chief innovations officer, Russ as chief operating officer, Grant as chief financial officer, and then bringing in other individuals, we went about our growth strategy. And you'll see we grew to 12.9 million in 2021. And if the audit's almost done, we don't expect those numbers to shift much, but at 12.9 million in revenue, and we were actually achieved a positive gross profit. In 2021, we acquired 5 companies. We spent a lot of money investing in and expenses associated with that strategy. The strategy is now paying off as the market is in a downturn. But if you look at 2022, we've projected, and we still feel very confident in this projection of 30 million in revenue. If you look at it, to go from $0 in revenue in 2019 to $30 million in 2022, we're talking about 3 years. 3 years, and we've accomplished a tremendous amount of growth. We expect significant profit in 2022. But then when we look at 2023, we still have a very strong M&A pipeline, and we have 2 companies that we're nearing the conclusion of our diligence on. And upon closing those companies, we'll be at 58 million in revenue. So we're talking about a company that went from 0 to 58 million in revenue in 4 years. I've been told that's not possible. I've been told that doesn't happen on the OTC Pinks. I've been told we're doing it wrong. I've been told all kinds of things. But the fact is, when you set out to accomplish something, if you set a big goal, you execute methodically, you don't give up, you overcome the obstacles, you can accomplish those big goals. Again, maybe not in the time frame you'd like, but as long as you stay focused and methodically implement, you accomplish them. So that's why I'm excited to talk about our first quarter of 2022. The market, I think the NASDAQ's down substantially, maybe 25, 30%. OTC's down in general. Risk is being pulled off the table. Fear is reaching a boiling point. Perhaps the market's capitulating. We don't know. But when we look at it, we look at our results. Our results are we accomplished on a quarter-over-quarter, a year-over-year basis, 106% revenue growth. We doubled our revenue. For the quarter, and I think this is an important point, we had $487,000 of gross profit in the quarter. Last year, we had a total of $565,000 in total annual gross profit. So just in the first quarter, on less revenue, we've accomplished more. But this is what's really critical, and this is a differentiator for us. Again, we set out to accomplish a strategy that's long-term focused, acquiring multiple companies with diverse revenue streams. As a result of those acquisitions in late December, 30% of our revenue and profit growth came from non-cyclical sources, so sources that aren't tied to the economic cycle. And 100% of revenue, 100% of gross profit 2021 came, 100% of revenue in 2021 first quarter came from cyclical sources. So we diversified before the crash or before things started to go south. And that's what strategy does. That's what #real strategy does, is you look out beyond the news, you buy good, solid companies, and I'm going to walk through each of these companies. You set big goals, and you execute methodically. So let's go to our real estate group, and we've set some really big goals. What I've shared with you in the past, and if you have an interest in researching, you can look at the progression of these presentations. And in the past, I've reported on the status of what we've accomplished. Today, I want to talk a little bit about our forecast, our objectives, and our goals. Now, again, cautionary statements. These are all subject to unpredictable events. But I want to talk about these goals because I think it's important everybody understand where we're going and why we bought some of these companies, and that as we continue to execute methodically, we will accomplish what we set out to accomplish. So with Sinacori Builders, over the next few years, we want to triple the number of custom homes they build annually. We want to complete a 42-story condominium project in downtown Charlotte that we've started. The goal is to reach $15 million in non-cyclical remediation and renovation revenue within Sinacori as a result of their acquisition recently of HRS Construction. And we want to get to where the Sinacori Builders Group consistently produces $50 million in annual revenue. Now, we have two other companies under LOI that are in the remediation space and rehabilitation space and in storm recovery space. We've been meeting with them consistently. We hope to execute on the acquisitions this quarter. Again, I'm a little careful on timelines now, but we will execute on these acquisitions again, hopefully this quarter. When I look at our health and wellness, we've set some big goals. So when we look at Renew You, these are our goals. We'll register the franchise with the FTC, open 3 new locations in 2022. We just executed a lease on a location in Charlotte and excited to be building that out as we speak. We plan to retain 10 master franchisees. We want to maintain, and our goal, even with the addition of new stores, is to have an average of $1.3 million in annual revenue per location. Our goal long-term is still to have 100 locations, and we want to help over 3 families in 2023. Now, one example I'll show here, and again, past results are not guarantees of future results, but I want to tell you just a real quick story. We had an individual come through, a family, a single mom in this case, with a kid that was on the spectrum and with autism, struggled and never spoke in sentences, spoke in a few words at a time for years. And they came in, went through the brain mapping process, adopted one of our packages, and started the neurofeedback process. Within a week, that kid was speaking in full sentences. and the mom, it literally changed the family dynamic. It was an amazing transformation. Those are the kind of things we want to do, and that Renew You is doing every day. Right now, they help about 300 families. We want to grow that to 3,000, and we want to do that in 2023. So excited about Renew You. When we look at the Drip Climber and the Drip Bike, both of them are patented. Our goals are very simple with these two companies. We want to sell 1,000 units next year, and we want to enforce our patent rights against any infringers. Coming to education. In the education space, here we have big goals as well. We are beginning to film again for Growing Together Academy. Our goal is to launch in the summer. We have 10 classes in the library for summer 2022. Expect that launch in the next 60 days. We will enroll, goal is to enroll about 1,000 students in the summer and fall. And of course, our ultimate big goal is to reach 10,000 subscribers. With AV Rover, we want to deliver 10,000 new broadcast units. Now, this is an established company that suffered during the pandemic and is ramping back up. And they have a broadcast unit that's in very high demand. And so we want to expand beyond just schooling. We want to begin to get into the health sector as well with hospitals and clinics. Another big goal there is to be accessible to the top 95% of school districts. On the travel and entertainment, big goals here as well. We want to expand the geographical footprint of our Canary Travel division. We're going to plan a minimum of 4 public travel events each year. These are enjoyable events, and they are profitable events. We want to reach 200 independent contractors, and we want to reach $85 million in gross commissionable revenue over the next 5 years. With Soku, we continue to work on that app and expect to finish developing the app and roll it out in full, or I should say in the next version by the end of this year. I have in the travel and entertainment, all I can say is we have some other things in the works and exciting announcements coming there. On the small business services side, we want to add 100 new shippers within post-bid ship. I can't go a day without hearing about supply chain. We're excited about this organization. We want to reach 50,000 loads annually, and we want to finalize our transition to hard hat freight. Again, we execute methodically. We set big goals. Sometimes we've been off on the timeline, but now we're taking an approach that these things are paying off, albeit at a pace that we didn't, at a slower pace than we wanted originally. But as we've discovered, it's a more realistic pace. Truden Financial Services, we want to become the accounting and back office support team for 20 entrepreneurs. We want to be the consultancy of choice for 5 microcap companies and establish a top tier of professional service providers. And of course, provide first-in-class services to the companies and members of the LTBH President's Circle. These are the presidents of our different divisions. So that brings me to slide 14 here, which is our undervalued stock. If you look at what we've accomplished, 5 acquisitions, diversified revenue stream, doubled our revenue quarter over quarter, expect to double our revenue and still sticking to our 2022 forecast of almost 30 million in total revenue. We'll be profitable in 2022. We look at acquisitions still in the queue, acquisitions still to be made. And what I'm most excited about is revenue coming from non-cyclical cash flow streams. And then you look at our stock price. And part of it is just visibility. But if you look at our price, what I say is that we have real strategy. We're making real progress. I've shown you real results. And I believe from an investment perspective that makes for a great opportunity. We have several things we're doing on the capital front. We are working on a strategy to reduce the float We are working on a strategy to ensure that going forward acquisitions don't add to the float. We are continuing to work on our uplist with our audit almost complete. We've been interviewing and are adding board members that are independent, including an audit chair and a comp chair and all of the things that you need as you progress. We're hyper-focused on uplisting. And I expect that once we get the visibility and people see and investors see, again, real strategy, real progress, real results, they'll see the opportunity and we'll see the results in the valuation of our firm and the valuation of our stock. So, of course, I want to answer questions. I know there are a lot of questions out there, but once again, let me go back to it all starts with strategy, and our strategy is working. We set out to buy revenue-producing, diverse cash flow stream companies and products. We're focused on building lives. That's what we do. And we're making real progress. So with that, Anna, I'll turn it over to you to answer any questions that are out there.
Okay, sounds good. You do have quite a few questions, Kevin. All right. Sherman M. asks the likelihood of a recession.
There's a great academic debate. Are we going to have a recession, not a recession? Well, we had the first quarter. The first quarter was negative GDP. I don't see how second quarter doesn't end up negative GDP. So by definition, we're probably already in the recession. However, I think it'll be a mild recession. We're preparing for the recovery already. That's part of having a strategy is that the things go up, they go down. But if you have a strong strategy and you have real companies and real revenue, you can weather real storms, right? And that's where we're at.
I get that. Jen Soto asks, why are you so confident in your long-term strategy?
I'm confident in my long-term strategy because I have done this before. Had I not done this before, I'd probably be a little nervous. And I'm not saying that there aren't times like all of us on our executive team, there are times we look at each other and say, wow, how are we going to handle this problem? And we handle it because we're focused on the long term. If you buy at the right price, if you buy in the right way, and you buy at the right time, you're going to do well. We've done all of those.
Sounds good. Good plan. Darnell Stanley asks, how do you plan to deliver value to stockholders given the market dynamics currently?
That's a great question. So again, when you're focused on a long-term strategy, you will attract, especially in downtimes, you'll attract long-term focused investors. So what we plan to do is reduce the float, improve the profit, bring on an investor relations firm that is focused on delivering real results, and most importantly, create visibility and show real progress, real results. If we look at the stocks that have gone down, we've got a lot of stocks out there that were hyped up, great technologies, this is great, things are great. Risk comes off the table and they fall apart. That's not us. We're focused on real progress, real results, real strategy, and I'm convinced we'll deliver real value to our stockholders.
Ralph Bridges asks, what criteria do you have before acquiring a company or brand?
Well, number one, it's got to somehow have a touch point on our mission, which is to build lives. Number two, it's got to be something that we can acquire strategically, either in terms of cost or in terms of method. And it's got to be something that we know if we professionally manage, we can build. Does that mean we'll bat 1,000%? Of course not. But we will have a very high batting average.
Okay. And Stephen Gray asks, what's the exit strategy for an acquired company? Is there a dividend to the shareholders in the cards?
That's a great question. So the exit strategy for any of the businesses that we have, number one, we'll evaluate, is the cash flow stream Strong, yes. If it is yes, then we'll keep it. And entertain offers. If someone offers us something we can't refuse, we'll sell it. And at the same time, we will strategically position some of these businesses up for sale where it makes sense. And when we get a sale, we will absolutely ensure that the proceeds from that sale or those sales go to the shareholders through a dividend.
And Julia Hernandez asks, what industries do you have your eye on in this market?
So in this particular market, you look for industries, and fortunately, as part of our strategy anyway, you look for non-cyclical industries, but that are still tangential to what you do. So getting into remediation, storm remediation, emergency services, some of those things is an ideal place to be. So it capitalizes on your core competencies. You leverage synergies. It's still in the industries that you're focused in. You add lifestyle brands, but at the end of the day, it all revolves around building lives. If you're effectively building lives, as I mentioned in the story in Renew You and helping that family, if you're effectively building lives in all of your brands, you will do well.
Right on.
We have an internal value structure that's very simple. We are compassionate profit makers. We're focused on making a profit. That's hard work. We're not afraid of a profit, but we're compassionate in how we do it.
I like that. Jeff Howell asks, what's the next JV or acquisition the company is looking to add to your portfolio and why?
So currently we're focused, as I mentioned, on some remediation services, specifically storm remediation. We're wanting to get into that because what we see is a pretty significant investment in the Southeast in real estate. At the very same time, we've seen that over the last 5 years. At the very same time, we see an increase in both frequency and ferocity of climatological events. So as that happens, it's an opportunity for us to go help people in crisis, again, focusing on that compassionate profit maker statement. We'll make a profit, but we're going to do so in a way that helps people. And it is those climatological events don't care about the economic cycle.
Right. I believe this will be our last question. Larry Steele asks, if you do hit 30 million in revenue, excuse me, what will your margins be? And what will the stock structure look like at that point? And what will the outstanding share count be?
Series of questions there.
Yes, one at a time. So what will your margins be?
Yeah, we aim for a 15% margin. We want to, as we diversify our revenue stream, we want to see that margin improve. So that's the margin question. As far
and what will
as
the stock structure look like?
Right. As far as stock structure, with the 30 million, we see a similar stock structure to where we're at today. We would like to see the float lowered. We plan for that to happen. And we would like to buy out some convertible notes, restructure our balance sheet, and put our long-term shareholders in a stronger position.
And what will the outstanding share count be?
Well, we've authorized, I think it's out there, it's public. We've authorized 2.3 billion shares. We've got 1.5 billion that have been in common. And we want to target 500 million. We want to target in the float. That's our goal.
Wonderful. Well, Kevin, we're out of time. We do have more questions for you, but we'll send them to you so you can answer on your own. But thank you so much for joining us again. We appreciate it.
Thanks, Anna. Always good to talk.
Okay. Everyone stay with us. We'll be right back.